Hi, this is Andy Filipiuk in Toronto for the week of June the 10th. There is a tremendous amount going on right now in front of the camera and behind the scenes that investors really have to pay attention to. I've been talking in the last several videos about the fact that the Federal Reserve has now paused and will likely have to cut interest rates. And what I'm planning to do on videos going forward is give updates as to what's happening, because for investors, it's crucial to know exactly what policymakers are doing. And it's fair to say that policies have failed. And the fact that the Fed is in all likelihood going to cut interest rates next month, the chances of interest rate cuts next month are now up to 70 to 80% chance. So the Fed is going to be following the market's lead in saying, yes, we are adjusting to the fact that credit is too tight. Now, one area that's worth following closely is the Eurodollar market, because back in 2007, the Eurodollar market inverted before the meltdown. And right now we're seeing the same action. And in fact, the Eurodollar curve is more inverted now than it was back in 2007. So keeping in perspective, an interest rate cut is not a good thing. I mean, people always equate a higher stock price with lower interest rates. But the reason they're forced to cut rates is that their policies aren't working. They only got interest rates to 2.5%, where they were forced to stop and now potentially start to decline. And what this means is, from a policy standpoint, they're trying to increase debt creation and borrowing to stimulate the economy in a global economy where debt levels are at all-time highs. So what this in effect is doing is the same thing as before, trying to front-end load consumption to reflate the economy, and it's not going to work. So what we're probably going to see is some sort of reset or new policy to try to create inflation and inflate a way out of the debt. If we can't, then we're probably looking at some sort of reset. And this is very important for investors to realize. A reset can be very, very costly depending on how they do it. So I will keep everyone posted on what's happening, but just re-emphasizing, this is a very, very dangerous time for equity markets, given the fact that the global economy appears now to be slowing quite quickly and policymakers have failed thus far. Thanks for watching.